Hi, I'm Darren Long from Delta Harbour Assets, and this week we've got some pressing questions to answer, so let's get to it. People want to know about supply, they want to know what's happening at the Royal Canadian Mint, if there's going to be further delays, and how sanctions and geopolitical instability are going to impact the price of gold. So let's get to it, let's talk about it on Hard Money.
There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference.
Hi, I'm Darren Long from Delta Harbour, flying solo this week, and of course, as always, bringing you the latest and the greatest updates in terms of gold and silver here at Delta Harbour through our Hard Money show. And this week, we're going to keep it very simple. We get a number of questions that come in, and of course, clients are asking different things right now. A lot of very, very pertinent information floating out there, but 4 questions in particular that keep coming to us. We're going to deal with them on today's show, and we want to talk about gold and silver prices because, as everybody knows, gold hit intraday high this week. It's all-time high, above 2,070 US in the spot market, and this is an exciting moment because this is the onset and continuation of this very big bull market we've been in for a long time. And right now, the world is teetering on whether or not there's going to be an expansion of the global economy, or like many believe, there will be a retraction and a response to all this sanctioning and likely this inflationary pressure and interest rate hikes around the world that will push our economy to the brink and in possibly recession territory. So without further ado, let's get to the questions. The first question this week comes repeatedly from our client base. And the question is, do you think that there will be continued volatility in gold and silver prices? Will there be opportunities to buy gold and silver at lower prices? Good question, asked by several people this week. The first part of that, let's deal with that last. Let's deal with the second part of that question. Will there be opportunities to buy gold and silver at lower prices? Well, define lower prices. If you're talking about a couple of percent, of course, gold and silver are very volatile metals. They can fluctuate day to day, up and down 1 or 2%, and nobody would bat an eye. Meaning, the price of gold could easily go back down to the mid-1900s, low to mid-1900s, and most people right now, analysts included, would say that's just a great opportunity to buy at a lower price. Could that happen? It sure could. But is it likely to happen? Right now, the cards say no. My bet is that whenever we get a bit of pullback in the market, we saw 2070, which is basically $100 higher than where we are right now. We are back in the 1970 and 1980 range as we're taping here on Friday. That there is likely to be a lot of buying pressure. And we know, because we're feeling it internally here, that people are picking up on this, and that a much larger percentage than, let's say, a decade ago are very cognizant of the drop in price, and we get a lot more phone volume when that price comes off $30, $40, $50, $60 like it is now in gold. Silver, likewise, all the way up to almost $27 an ounce. And at the moment, it is sitting in and around the high 25 range and doing very well at the moment. Again, representing great opportunity if you're looking at it from peak to buying opportunity. And we think that there will be continued volatility in the short term. And as I said, 1 or 2%, always a great time if you're a stacker or looking for that opportunity to get into the market to buy at those lower prices. Now, will silver and gold go lower? Well, based on the fact that we have extreme amount of inflationary pressures in the marketplace right now, based on the fact that oil prices are going to continue to go higher, which is the major contributor to inflation, based on the fact that we're seeing geopolitical instability, which we're going to talk about in a minute, and based on the fact that the cycle for the stock markets has run its course and is more than likely already past the 12 noon high point and on its way to the 6 o'clock at the low point, I would say no. We're not going to get any major opportunities where I think the price of gold pushes back into the low 1800s, high 1700s like it did just a month ago. Likewise with silver, is it going back down towards the 22, 23 range? No, I don't think so in the short to medium term. I think that we see much higher prices. Now, in terms of volatility, yes, expect there to be volatility. I can't emphasize enough how patience is a virtue in this marketplace. Never make snap decisions. And of course, as an investor, always, always, always weigh the risk against what you need and your goals are. Talk to the people that you trust. Talk to the people that are closest to you about your wealth strategy and figure out where gold and silver fit in before you make that first purchase so that you can do so while still being able to put your head down on the pillow at night, so to speak. That's a great question. And again, it's ongoing. So that volatility is to be expected, but likely the prices look poised to be moving higher, and we're base building right now, just having pulled back from that all-time intraday high in gold this week of 2070, and looking forward to the next motion higher. The second question we're going to deal with this week is that, do you believe that inflation will continue to go higher? What impact does inflation have on gold and silver? It's a great question. It's a two-parter. Again, a very common question this week. Lots of clients asking this. The first part of that question, do you believe that inflation will continue to go higher? The answer is overwhelmingly yes. The posted rate, 7.9% in the US, came this week. I expect that when we get the report coming in the next short while in Canada, that again, the hallmark rate that is posted for us in Canada will be higher than last month and will be pushing 6%. And that is to be expected. As these price of a barrel of oil rise, the cost of everything goes higher, because let's face it, what doesn't oil touch? Now, historically, in dealing with the second part of that question, gold and silver have been very good to respond to the threat of inflation. I would say or argue that there is historical data to support the idea that once inflationary pressures have been set in stone, like we saw in the early 1980s, that the price of silver and gold have already done in being to their climactic peaks. And so it's that threat of inflation, as we see now, going higher and putting pressure on the stock markets, on our day-to-day living expenses, on the cost of goods. It's that threat that historically has served as a fundamental fuel for the fire of gold and silver prices. I expect that to continue, as do our colleagues here at Delta Harbour, which means you can more than likely expect silver and gold to perform positive because of those inflationary pressures. Let's face it, the reality is at the street level in both the US and Canada right now, inflation is exorbitant, probably in the neighborhood of around 8, 9, maybe 10% in some sectors, and higher in Canada, and definitely at the street level in the US. It is running rampant, up around 10+%. It is more than likely that a lot of the data gets swept under the rug, and let's not forget that ultimately those data points don't necessarily include what they say is the volatility of the inflation equation, which is oil or gas. So if we factor that in, inflation is going to run rampant here for the next while. Could be well into next year, but certainly for the remainder of 2022. And that will, as I said, have an impact on the prices of gold and silver. Expect them to go higher in part because of those inflationary pressures. Now, when we're talking about all this inflation and the impact that inflation has, typically this leads to the next part of it, which is one of the questions we get quite frequently, our third question of the week, which is you talk about geopolitics playing or being a fundamental pillar for investment in silver and gold. Do you see gold and silver going higher at this point in time due to geopolitical instability? Well, let's unravel that for a minute. What do we mean by geopolitical instability? Well, war. War is a definite factor in geopolitical instability. Sanctions like we're seeing right now against Russia by the rest of the world, definitely creating geopolitical instability. That threat of violence in different areas of the world definitely creates geopolitical instability. So not only historically do we see countries within the regions of that geopolitical instability bulk up on their gold buying, but also we definitely see a corresponding move upwards when we go through periods of geopolitical instability. And we can see that as the onset of the bull market 18 years ago or so, roughly, in gold and silver, culminated really with the onset of 9/11. And so you do see geopolitical instability playing a role and a factor in what's going on. And of course, because we expect that the amount of sanctions that are being placed on Russia are going to lead to a lot of discomfort, not only regionally within the area, but also globally as supply chains break down, as different types of fossil fuels get left behind in favor of moving elsewhere around the world. You saw this week, of course, the U.S. calling out to Venezuela, the first time in a long time, to hopefully increase the uptake of the gap that is being left by the lack of Russian oil coming into the country, and the preparation that is going to be ongoing for that. I mean, were these things expected? Probably not by a lot of countries. They didn't know to what extent the global community would push these sanctions to the nth degree. But let's face it, if the focus is on saving lives, then the ultimate push towards real war breaking out among powerhouses like the US and Russia, if it can be avoided using economic sanctions, then we support that. Of course, at the end of the day, want to remember this is not about finance, this is not about money, this is about lives and people's lives. And unfortunately, the situation right now is such that geopolitical instability is going to increase, not decrease. And as a result, yes, you will see assets like gold and of course, trailing behind it silver, get a lift up, and that will add fuel to the fire in terms of pricing. We expect much more of this to occur over the next little while. And of course, typically, if the central bankers weren't involved in pumping up the markets and the money printing, which is tightening at this point, wasn't still on the table if things don't go right, you would definitely see the stock market starting to crumble. You're seeing a ton more volatility in the marketplace right now, and that geopolitical instability is going to rise as the threats of natural gas and oil become realities for countries that rely on the supply from Russia that are not going to get it, or have problems otherwise related to this geopolitical instability. So definitely a problem there. And the last question, something that's common in times like this, we saw it as early as 2008 when this bull market started back in 2002. We saw 2008 bring about a significant change in the attitude towards premiums on physical bars and coins. Now, as most of you may know that own gold and silver, there is a disconnect between physical silver, which we have in bar form, the real stuff, and the paper markets. And of course, lots of you will read. There's tons of analysis out there, and our friends and colleagues in the marketplace do a great job of talking about that disconnect all the time. But the paper markets do not equate to the physical markets. What we see happening in the physical markets right now is unprecedented. We've never in 20 years of the business experienced this type of demand and pressure on demand, nor have we experienced this type of delay from places like the Royal Canadian Mint and other mints around the world, as well as well-known fabricators. That being said, the beauty of being part of this in this situation is that firms like ours at Delta, others like ours across the country, there are a handful of these top-level, top-tier companies that have very consultative relationships with their clients. We have the ability to bring in new suppliers, and more recently we added Pamp products in both silver and gold to our product line, and I just showed you one of the products. This is the Pamp 1 kilo silver bar. Hopefully the camera can get that okay, but if not, our website does show it. It is a nice thick bar. It's beautifully marked. It has the assay certificate talking about the credentials of the bar, the fineness, its weight, and it has the stamp on there from Pamp. and that product can be brought in as necessary to fill the gap. So where we do experience some delays in local product for Royal Canadian Mint and others, we are picking up the slack with products like Pamp. So if you are on our website, you are looking for product, then I would highly advise you to take a look at the Pamp product. It is LBMA certified, and it can be bought and sold globally, and it is every bit as good as the Royal Canadian Mint product. So it is a good alternative if you're looking specifically for Royal Canadian Mint. The delays that we're experiencing, they are expected to continue, unfortunately. Most of the mints, and we'll talk about this more so as time permits, but most of the mints and the refiners are dealing with the pressures of being at full capacity. They can only produce so much. There is lots of raw product. There are some mining firms, Keith Newmeyer being among them at First Majestic, who have decided to hoard some of their product until prices do go higher to be at a more respectable level that they believe is more accurate when it comes to things like silver. But that being said, of the raw supply that's coming in there, there's no lack of it. It's just the capacity to refine product. And when we talk to our suppliers, the Royal Canadian Mint, we are among the few that still are able to do so. There is no doubt that there are going to be delays on product. We can order as fast as we can get it done and buy as many million of worth of silver and gold as we can buy. But in order to get it and get it delivered into our client base, sometimes it becomes difficult. So we expect delays to increase as the demand grows, and demand is growing dramatically. We expect that to have an impact on pricing, and that disconnect in terms of what you pay for a bar or a coin is unfortunately in this circumstance until the true price of silver and gold reach their levels, the respectable levels. We expect the premiums to remain high, unfortunately. And we do everything we can at Delta not to pass that along to our clients. We've kept our margins in check. And in this particular industry, unless you're not looking for consultative services, you just want to shop, go home, take it, and never talk to us again. This is what our fair pricing strategy has always been, is to offer fair prices on all of our products and to make sure that you have good choice and selection, and to focus on only quality products that give us the opportunity to provide best pricing policies for you, our client. So that being said, those are 4 questions that have been repetitively asked this week and part of last week, and next week we'll be back with John Scholes hosting the Hard Money Show, but he has taken a well-deserved break this week, so I thought I would just talk to our listening audience and put some of those questions and answers to rest. And by all means, if you do have questions, give us a call. It's not hard to get in touch with us. Go to the website, deltaharbor.com. That's harbor with a U because it's all about you. And our phone number, 1-877-323-4653, or if you want to remember it, easier, 323-GOLD, 877-323-GOLD. It's been always a pleasure to speak with you, and as I end every show every week, always remember to take care of those who don't have as many privileges as you do, less fortunate. Give to your local food banks. We say it every week, and we hope that everybody has a wonderful, prosperous week. We look forward to speaking with you soon, and as always, keep those questions coming. It's invaluable to us to be able to answer them for you and do it in this way. So take care. Look forward to speaking with you soon, and thank you for watching. Always remember to subscribe, hit those like buttons. We appreciate it greatly. Take care.